Hey everyone, I'm Tony with Clarkson Santoro, and this is your weekly real estate update for June 24th. In this weekly series, we update you on the latest real estate trends that are occurring on our real estate market here in San Ramon. Using our more than 50 combined years of experience helping clients buy and sell homes, we explain what those trends mean for you as a homeowner or as someone who is looking for a house that you will love to call home. Our active current inventory is 107 homes, up from 98 last week. The average asking price of those homes was $2,097,000, which is slightly down from last week's average asking $2,099,000. 4 homes, asking an average of $1,734,000, went pending this week. That is less pending homes than last week's number of 10, with a lower average asking price from last week's $1,883,000. A total of 11 homes sold this week, with an average sales price of $2,028,000. That average price was lower from last week's average price of $2,316,000, and the total number of homes sold was higher than last week's number of 8. Now that we've seen what the market did this week, we also like to look at 6 broader trends that help us understand the strength of the San Ramon market, and more importantly, give us context on how the market is changing. The first 4 indicators give us a look at the quantitative numbers, which tell us what the market is doing, and the final 2 indicators are more predictive about where the market might be headed. To quickly summarize, last week, the market has shifted to a more buyer-friendly status, and the trend started about 5 weeks ago on or about May 12th. The first indicator that we look at is our housing inventory levels. The number of homes on the market has been climbing steadily since May 4th and now stands at 107 homes, about 115% over the amount of a normal market. As inventory builds, it takes the pressure off of buyers who no longer feel the need to compete over every single home that they look at. Consequently, it makes it more important that sellers do all they can to present a more compelling and presentable home. This may mean painting and staging, to name a couple of presentation options. Last week, this indicator received a score of 25, already being very favorable towards buyers. This week, we're giving this indicator a lower score of 20, confirming that the inventory levels continue to strongly favor buyers in this market. The inventory turnover rate is one of the best gauges to judge the health and strength of the market. Over the last year, the market turnover rate has averaged about 2.4 times every month, but it dropped below 1.0 on May 21st for the first time since 2019. The level of 1 is usually considered a neutral market, neither favoring buyers or sellers. Today's measurement is just 0.27 times per month, lower than last week's number of 0.35. Prior to the market's slowdown, the average home was selling in about 10 days or less, but that average is now nearly 90 days, which is more than last week's 80 days. Last week, this indicator received a score of 28, leaning in the buyer's favor. This week, we give this indicator a lower score of just 20. Making this a strong buyer's market. Of all the statistics we create and monitor, this one is perhaps the most important and for now, most troubling. Next is the amount paid over the asking price, and it is another great barometer of the market's strength and depth. Since May 23rd, we have seen the amount drop from $310,000 over the asking price to today's $124,000 using the 30-day rolling average. This is still a nice amount over the asking price, but it is $65,000 lower than last week's 30-day number. If we look at the more recent 7-day rolling average, this dollar amount has fallen from $321,000 on May 23rd to just $149,000 last week, and this week it fell to just $35,000 over the asking price. Going forward, this is bound to affect the price that sellers will ask for their homes. As I mentioned last week, sellers should now price their homes at or close to the market value of their home, not expecting a bidding war or much over the asking price. Some properties went on the market expecting to receive multiple offers and get bid over the asking price, and are now sitting unsold and are exposed at a lower price than they think it should sell for. As counterintuitive as it may seem, we will probably see price hikes on some properties as they reprice themselves to what they perceive as the true market value of the home. Last week, this indicator received a score of 68. This week, we will give this indicator a slightly lower score of 60. The amount paid over the asking price is still very good, but it is important to keep in mind that these numbers reflect what the market was doing 30 days ago. Closing sales in the coming weeks will tell us how much this market slowdown will affect prices. We believe that this number will narrow dramatically as homes change their pricing strategy to an at-market value instead of an under-market value. Sales prices based on the 30-day rolling average have been declining since May 24th, when they hit an average of $2,396,000. This week, the closing number was $2,117,000, which is about $66,000 below the year's average closing price of $2,183,000. It appears that prices have peaked and are declining a little bit. Last week, this indicator received a score of 83, and this week, we're lowering the score a little to 80, reflecting that we are experiencing a small but steady decline in property values from the year's high. One of the two predictive indicators we follow is the Invesco QQQ Stock Fund. It tracks the health and valuation of high-tech stock market, and we have watched this indicator drop from a high of 401 on January 1st to as low as 290 a few weeks ago. It had climbed back up in the past few weeks to the low 300s, only to fall dramatically back down to 271 last week. It is recovering a little bit and now stands at 292 today. The stock market and the high-tech equities in particular are worrisome and appear to have fallen into a bear market. There are clear signs that the Silicon Valley economy is under stress, and there is talk of reducing their risk profile, which usually means reducing hiring and lowering expectations. If the Silicon Valley economy cools, we will see the effect here in the Valley, as most of our buyers from the last 2 years came out of the Silicon Valley area. Last week, this indicator received a score of 32, and this week we are improving the score a little to 33. The last indicator we follow are interest rates, which have been climbing since August 2021, when the rates were only 2.84%. 2 weeks ago, rates dramatically jumped up more than half of 1% to 5.75, and today they stand at 5.81%. This is another layer of disturbing news that will further cool our market. It appears from comments from the Federal Reserve that the long-term trend of higher rates will continue for some time. Last week, this indicator received a score of 35, leaning towards a weaker market. This week, we give this indicator an even lower score of 34. In summary, the most current metrics and indicators show a market that is changed from a strong seller's market to a market that is now a strong buyer's market in less than 6 weeks. Bidding wars are rarely experienced. Homes are taking much longer to sell, and buyers are no longer rushing to secure purchase. Instead, they are kicking more tires and they have many more properties to choose from. Last week, the overall market score was 35, and we are lowering it again to 30. As we mentioned last week, it is important to keep in mind that the average sales price of a home in San Ramon in 2020 was only $1,306,000. Today, it stands at $2,183,000, a change of about $880,000, or a total of increase in appreciation of nearly 66%, about 26% year over year. It appears that values will be declining during this transition to a normal market, but we need to keep in mind that we have experienced over the last 2 years the most dramatic property appreciation without parallel in San Ramon real estate history. Every period of dramatic price appreciation we have experienced has always been followed by a time where the market pauses to catch its breath. Only time will tell how long this pause will last. I hope this weekly summary and commentary helped you understand our market better and how it is affecting you. Let me know in the comments down below or contact us directly if you have specific questions about how you can navigate this market to sell or buy a home. And if you find this information helpful, share it with a friend, hit the like button and subscribe so that you will always be up to date on the latest real estate news here in San Ramon. Have a safe weekend, and we'll see you next week with a new update.